What's up, guys? Jay Martin here, investor and CEO of Cambridge House, and my guest today is Brett Heath, the CEO and president of Metalla Royalty, in addition to the co-founder and chairman of Nova Royalty, a story that most of my subscribers are fairly familiar with because I've had the CEO, Alex Sukernick, on several times. And I really wanted to chat with Brett because I feel like I've interviewed his entire circle, his directors, his co-founders, etc. And even though he founded Metalla in 2016, it almost makes him like an OG in the royalty and streaming business today because of how many new listings have occurred in the last 24 months. So this one's short and sweet, but it was fun chatting with Brett. I hope you enjoy it. 3 things before we kick off. As always, there's a pinned comment beneath this video where you can subscribe to my weekly newsletter. It's free. I'd love to have you join the team. Number 2, this channel now generates significant advertising revenue, which is awesome. And so what I've decided to do with this cash is donate it to an organization that's super close to my heart called Zero Ceiling. Zero Ceiling's mission is to end youth homelessness. The way they do this is by giving at-risk urban youth the opportunity to relocate to beautiful wilderness areas. They partner with accommodation, they partner with employment training, and provide just great influences on a young person's life. Get them into nature, which, you know, it's so beneficial and so transformative, especially if you don't have the resources to make that shift on your own. So Zero Ceiling's rad. Check them out if you want to. Number 3, if you would prefer to listen to my content as opposed to watch it, you can now find me wherever you listen to your podcast. Just search for The Jay Martin Show. All right, here is Brett Heath. Enjoy. I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, guys, Jay Martin here, investor and CEO of Cambridge House, and I'm joined right now by Brett Heath, the president and CEO of Metalla Royalties. Brett, it's great to have you on the show.
Thanks, Jay. Thanks, Jay, for having me.
You know, I'm inclined to say having you on the show finally, because I feel like I've been interviewing all of your direct circle. You know, I've had E.B. Tucker on a handful of times, one of the directors of your company. I've had your, I don't know if you'd call him your protege, Alex Sukernick, Nova Royalty, on the show probably 5 or 6 times. Definitely a crowd favorite on my platform, but I know you're very involved in both companies, still president and CEO of Metalla and chairman, I believe, of Nova, right? And co-founder.
Yep, that's correct.
Okay, now I thought an interesting place to start, therefore, because you know, you could say that you're kind of an OG in the royalty game compared to all the new listings that we've seen in the last 18 months. And are you surprised, Brett, that suddenly there's been this surge of listings in the royalty and streaming, specifically in precious metals?
Well, I mean, I'm not surprised because it's truly an amazing business in and itself. The underlying assets are just the gift that keeps on giving in this sector. I mean, you've got non-dilutive, free carried, exposure to an asset in perpetuity that results in top line cash flow. They're just phenomenal assets. So it doesn't surprise me that there has been a lot more royalty companies that have come to market in the last year or two. When we started Metalla back in 2016, there were very few companies that focused on the existing market at that time. A lot of the bigger royalty companies would buy stuff out of the existing market, but it wouldn't be a core part of their business. So they never approached it as really a platform to be able to go out and consolidate some of these amazing assets. And so that was the strategy that we saw, or really the opportunity that we saw back in 2016. And I believe we had a huge, first mover advantage, really focusing on this part of the market, picking up kind of the best of what's out there, particularly in the smaller end of the price target. And we saw an opportunity with Nova too, doing the same thing, because using this strategy, it allows you as a small company to scale your business on very high quality assets that are operated by the biggest mining companies in the world, that more or less, these companies would never sell you a royalty. They would never sell the biggest royalty companies a royalty. They would never encumber their own assets, yet when you're focused on this part of the market, you can kind of sneak your way into just some truly amazing assets. So that was the thought process there. The market was there, but that's also changed quite a bit over the last 5 years as we've seen a lot more companies kind of take the approach that we took, and I believe because it's just a great way to scale your business.
Yeah, and the key words you used are high quality assets, and that's become much more competitive to lock those in. Costs have come up significantly since you launched in 2016. Now it's increasingly difficult. So do you think that entrepreneurs in the precious metal space have realized that investors favor this as like an introductory step? If you want to begin investing in the precious metal sector, historically, royalty and streaming companies are a great place to go because you've got limited downside risk, all the key points you just mentioned, but it doesn't guarantee a good play. And so what can investors look for if they want to dive into the details of, a new startup royalty company and they look at the agreements? Do you have any hacks, Brett, that you could share with my subscribers to say, here's how I do some quick diligence on a new royalty listing?
Well, yes. So there's two things that I would look for. I would look for, first off, the quality of the assets. So the streams and the royalties that they have, are they being advanced by mid-tier or major producers that don't have that financing risk? I mean, if you look at the sector today, the majors and the mid-tiers balance sheets are really the best they've looked in the last 2 decades.
Agreed.
And all of the development assets or development royalties that we have on projects that are being advanced by majors or mid-tiers right now are all being self-financed. And so there's no financing risk when you're dealing with these big companies, and their balance sheets are amazing. Now, on the flip side of that, that's making it even a bit more competitive because the traditional business model of the royalty and streaming business is a capital provider.
Yeah.
And if the balance sheets are rock solid with the majors, that is going to make things more difficult for the larger royalty companies to do deals, which in turn may put a little more pressure on the mid-tiers because the big guys are probably going to be moving a bit further down the food chain during those types of times. But the second thing, past the high quality assets that are being advanced by the big companies, is really the ability for the company that you're investing in to source deals. Because if the company in this business, in this competitive environment today, if you can't source deals and you can't buy high quality assets outside of competitive processes, inevitably, given the way the market is today, you're at best trading dollars, if not less. So, a lot of the junior companies or new companies are really focused on cash flow. And cash flow is an amazing thing. I mean, that's what the royalty business has been built off of. But when we looked at the business, obviously we bought 2 cash flowing assets last year with Wharf and Higginsville. We've got 5 producing now. We've guided to generate 22 to 3,200 gold equivalent ounces this year. But it's never been the sole focus of our business because we never saw really value in it. And a lot of the cash flowing deals today, or the companies, or at least the small companies, the big ones are a different story. It's almost a mirage because if you're trading $10 to get 8 back, inevitably that is going to be destructive to the share price. And given the way the market's competitive, a lot of the smaller companies are engaging in these processes to buy these assets, and I think unfortunately over time it's going to be more destructive than anything else.
Interesting. Okay, so thank you for that. I want to back up now and just talk about the gold sector from a macro standpoint a little bit. I actually just got off their call with Ronnie Stofferly, the author of In Gold We Trust and managing partner at Incrementum. And he was at the Denver Gold Show Beaver Creek Precious Metal Summit. Were you there a couple weeks ago? You were there. Okay.
Yeah,
Well, let's start there then. Brett, how would you describe sentiment at those two events this month?
I think the sentiment now is as close as it was to the latter part of 2015 than I've seen it, which at the time was really the bottom in the gold price, right? We saw gold in 2011, go up to 1900 and change. It came all the way down sub 1100 briefly towards the end of 2015. The sector was pretty dead at that point. And then since then, we've had an advancement, but it's been more of a choppy exercise than anything else. It's gone up, it's gone down, it's gone up, it's gone down. Over time, we're at actually a great price right now. I mean, $1,800, $1,700 gold. Like I said, the major mining companies, their balance sheets are solid. They're making tons of money. They're raising their dividends. You would think that there would be a lot more excitement going on in the sector today at this price. I mean, it's really an amazing price for the sector, and over the long term, it can generate some great returns at $1,700, $1,800 gold. We really don't need anything higher than that. But that being said, from a sentiment perspective, it's pretty bad out there. I have to say it's one of the worst times I've personally seen it since we started the company back in 2016.
So what's driving that? Because, well, it's funny. I look at my portfolio right now, and it's a lot of red on the screen, right? I'm in a lot of positions that are down, and truthfully, I have. Okay, so what I was discussing right before I asked you about sentiment at Beaver Creek was I just got off a call with Ronnie Stofferly. He was also there, and he was leaving one of the halls connected with somebody who he described as a diehard gold bug that he's known for a while. And this diehard gold bug put him on the spot and said, Ronnie, if gold's not performing now, how can we still have conviction? I think the gold narrative is dead. It made me laugh because 2 days ago, I was chatting with a peer of mine in YouTube land. He runs a channel like I do, and commentary, interviews, personalities, all this stuff. And we share portfolio notes about once per quarter. And he was grilling me very, very similar. He's like, Jay, all the macro forces are supportive of the gold narrative, but gold's not responding. I think that story is dead. I think the narrative is over, which to me was like the most bullish thing I'd heard in months, right? And I was like, geez, this is perfect, right? When you have these insiders saying, okay, it's time to throw in the towel here, right? So, the gold price though, Brett, it's not, I wouldn't call it depressed at all. The equities haven't performed, but what's with the incredibly negative sentiment? Because the latter half of 2015, as you described it, I mean, I was running precious metals investment conferences. It was depressing. It was tough, but I wouldn't call it that today. What do you think?
Well, I think there's just been lots of distractions for the most part. I mean, you've got a general equities market that just kind of continues to go up every single year. You've got, real estate that has been going up every single year. You've got a lot of asset classes that have just not been going crazy, but just been kind of slowly going up. I think a lot of that is due to inflation, which gold is supposed to hedge against that. And I think gold really saw the inflation coming. And I think that's why it made kind of a move from 1,300 up to 2,000 initially. And then we've been consolidating. But what we've seen is that, we've really seen the very beginnings of what I think is a much longer term commodity cycle. Like it's so clear when you take a step back. You look at commodities across the board, you look at inflation creeping in. I mean, it's got everything that you need in regards to the commodity cycle. Now, at what point in time do certain commodities move and others don't? You never know that, right? It's something that these assets move kind of on their own sometimes, and they move in cycles. But the one thing that we do know is that the macro trend is that we are in a big I believe, the beginning of a very strong commodity cycle. We're seeing it with all other commodities across the board. In fact, I believe gold and silver are the two worst performing commodities out of the sector. And that also probably has a lot to play into it. Just kind of the timing where gold made a move, really ahead of the rest of the commodity sector and has kind of been consolidating since then. But I mean, nothing has really changed on the macro side. I think that, in the world that we live in today with total investable assets and gold representing, I mean, it's probably less than 50 basis points now. I mean, it was 50 basis points. Usually it's about 2-3%. So even if it got up to just the low end of that, I mean, the amount of capital that would flow into the sector would be extremely impactful. So, I mean, I think the way that you have to really look at it is you have to look for these contrarian indicators in the contrarian approach. And I have seen a lot of the same kind of deep contrarian indicators, whether it's individuals or other things that I've seen that where even the most bullish people have turned bearish. And that's how markets work. When there's no one left to sell, then you've got the bottom, and just like a top when there's no one left to buy. When everyone's in the trade, that's typically the top of the trade. So I think that there are some good times ahead for the sector, but I mean it is pretty rough right now. There's no question about that.
Interesting. Yeah. Okay. I don't know if I agree that it's rough. I guess I just don't feel that. I don't feel the depression in the markets. I actually find it to be quite exciting, truthfully. And when I look at any asset right now, where could I allocate capital, right? What is undervalued? It's really hard to find anything, right? But precious metals is one. And I'm not a gold bug, Brett. Like, I get labeled a gold bug by friends of mine who don't own gold because it's just what happens, right? If you have 5% of your portfolio in gold to someone who doesn't own any, that makes you a gold bug. But I can't find much right now that isn't inflated in price outside of the precious metals and certain commodity derived equities. So, okay, next topic I want to jump onto with you is cryptocurrencies, because correct me if I'm wrong, but I think in May, during an interview on Kitco, you made a call that you believe cryptocurrencies could be the catalyst for the next big financial crisis. So I'd love you to walk me through your thought process there.
Well, I mean, it's pretty simple. We've seen, and I'm sure I'll probably get lots of hate mail on this one, but we've seen similar situations in the past. You get new types of financial products that are adopted, but very unknown to the masses, and kind of what the type of repercussions can be if there are ever problems with these new types of financial products. And we're seeing that mass adoption, but I don't think any of these things have really been tested. It's too young of an industry where they have experienced a handful of crashes as it's gone up and gone down. Now, I mean, I do believe cryptos are here to stay. I believe that the underlying technology and the related applications are here to stay, and I believe that they will change the way that we do things, just like the internet. I mean, there's no question about that. But the 10, 20,000 different coins that are out there, with market caps that are, much bigger than the gold sector, much bigger than the biggest gold companies on the planet. I think that there, may be some problems. But when you get mass adoption on these types of things, just like the tech bubble, when you had tons of companies with different websites with nothing behind them, trading at absurd valuations, and finally that came home to roost. A lot of people lost a lot of money, and when you get a lot of people losing a lot of money all at once, that has typically that will have like a very significant domino effect throughout the financial markets. And so, I think that, crypto can get way bigger, and I think it's still really unknown. And like I said, I am very positive on a number of kind of parts of the crypto space. But I do believe that if it does get a lot bigger and it crashes, then it could have a pretty material impact across a lot of markets.
Interesting. Yeah, I see you there, because there's a lot of cash tied up, and any kind of crash like that causes a liquidity crisis, and we need to find cash somewhere, creates more selling, all of this stuff. Okay. Thanks for that, Brett. Look, I appreciate it. It's been awesome having you on. It's about time we did this, because like I said, I feel like I've had your whole circle on my show, and it's about time we had you on as well. So thanks for making the time. It was great to have you on, introduce you to my audience, and I'd love to do it again sometime.
Yep. Sounds good, Jay. Thanks for having me on.
Okay, guys, 3 last things. First, if you enjoy my interviews and would like a bit more, you can subscribe to my Friday newsletter. It's free, and the comment to subscribe is right beneath this video in that pinned comment. In this newsletter, I share my key lessons learned, takeaways, and any actions that I might be taking in the market as a consequence of what I've learned on the show. Second, when I started a YouTube channel, I never anticipated generating any advertising revenue. But coincidentally, I do now, which is awesome. And so what I've decided to do is donate this to an organization that is very close to my heart called Zero Ceiling. Their mission is to end youth homelessness. The way they do this is by providing young people experiencing homelessness with supportive housing, employment, professional support, life skills, and outdoor adventure. Because often young people in urban centers with no resources will never get the opportunity to experience wild places, nature that can be so transformational, and absolutely was for me. Third, if you prefer to listen to my content, you can now find us wherever you listen to podcasts. Just search for The Jay Martin Show.